trading for a 3-month time horizon, it falls 50% on you. Well, you've got it dead wrong because your time horizon is different. So I am looking to add more to my positions into this kind of market because I don't think anything's changed. Nothing's changed in the network adoption. Network slowed down a bit for the reasons we talked about before. So over time, we see the institutions coming. I'm talking to them every day. I launched a crypto fund of funds. We've already put the first $100 million to work. That goes straight into the markets via the hedge funds. That ongoing allocation of assets is happening. So it doesn't stop. So it trades sideways for a year. That's great. Tends to mean periods of suppressed volatility lead to hyper volatility. Periods of hyper volatility tend to lead to periods of suppressed volatility. And we basically had a sideways market where volatility has been falling since May. So that's how I think about it. In terms of the allocation of tokens, the answer is I don't know. Yeah. It's complicated. We had a big move in the layer ones, AVAX, Terra, and Solana. Usually chasing the previous theme is a way to lose money for the reasons you said before, is you're not taking advantage of weakness. What you're trying to do is follow the momentum in a market where people are just rotating. That's usually bad. You can add to momentum trades when the whole market's in momentum, not when it's rotating. So where could the rotation go? That's the question you should be asking. Well, some of these DeFi ones had a big run in 2020, haven't done anything, and fallen 70%. Maybe it's DeFi. Maybe it's the interoperability, the ones that allow you to move things from one chain to another. They haven't really had a big run. Maybe it's those. Metaverse have had a run, NFTs have had a run, Layer ones have had a run, Ethereum's had a run, Bitcoin's had a run. So you need to be thinking, okay, what hasn't had the run yet? Yeah. And again, I wouldn't try and look for one particular single token because your probability of success, unless you really know it, is super low. Build a basket of stuff, equally weighted, don't take too much risk, wait and see. My view, and it has been all year, and I've been looking at this whole junction all year because I think it's the bigger trade, is I think the Fed are not going to deliver what they say. I looked at every recession going back to 1963, and almost every single time there is a growth scare early on because the economy's not fully stabilized yet. So what happens is stimulus comes out of the economy, fiscal stimulus. The Fed start talking about tightening because inflation's risen, because the year-on-year rate of change and stuff like that. This time we've got supply issues. And then what happens is the Fed think about raising, and before you know it, growth evaporates again. And then the Fed actually end up cutting. So I think we will get a couple of rate rises in, potentially, maybe only one. That's my view. Well, because I think by June, I think inflation's back down to 3%, and the ISM is probably closer to 52 than it is to 60. So you don't want to tighten into a falling economy going into an election. I know the narrative now is, well, they need to tighten to look like they're fighting inflation. Best thing to do is talk tough, get a rate hike in, maybe two 25 basis points in, then let the natural kind of ebbing and flowing of the economy work in your favor. You can say, we've beaten inflation, and then you can get a stimulus package through.
Yeah, take a victory lap that we jawboned it before we had to actually do.
And then stimulate ahead of the election. I mean, that would be perfect for them. So if the market is wrong in expecting higher inflation for longer, then growth stocks will explode higher again. Because really, let's face it, we live in an exponential age. Anybody who thinks that tech stocks, high growth, long duration tech stocks that are capturing exponential rise of technology are not going to go up again, that can't happen just because of network effects of what's going on. We're not talking about IBM here or GE stock, or some of these things can trade sideways for decades, but you can't trade sideways for decades when you've got exponential growth going on. It just can't happen. Now, you can have periods of a year, 18 months of sideways down markets, which we've been seeing. But then what happens is they end up looking ludicrously cheap versus what's happening. And the moment the inflation story disappears, then everyone piles into growth again. Crypto is similar to growth. It's driven by its own network models and adoption. There's a bunch of other stuff. But similar to that, I said crypto had been trading sideways because wage growth has not kept up with inflation. So marginal marginal dollars to invest by retail has been reduced. And I think that it gets partly caught up in the growth story, but there's no correlation really between bonds and crypto, the dollar and crypto. They're all passing correlations that come in and out. Suddenly the S&P is correlated for a bit and then it's not. So I don't worry about that. I just look at the network effects over time. But if the Fed increase the size of the balance sheet, then it's all correlated because you're lowering the value of the denominator. So that's why when the Fed increase the balance sheet, what you find is that everything goes up. Now, does it happen when the Fed decrease the balance sheet? Are they going to shrink the balance sheet? And does that crash the markets? If they do it, markets will stop going up as much because of the fact that you're increasing the value of the denominator. So it changes that. So yes, we saw it last time around. There was a period of time as the Fed were reducing the size of the balance sheet. No, they kept the balance sheet stable. Stocks were sideways for a while. But then even with a stable balance sheet, stocks took off again because the growth story is still underlying. What the market won't like is raising rates. It took 8 times before the market cracked last time. So it never happens on the first